Good afternoon and welcome back to the NWR Virtual Investor Conference Series 11. I'm your host, Bando Blake, and up next we have Mighty Craft, ASX code MCL. Mighty Craft is one of Australia's leading and fastest growing premium craft drinks companies. They enable craft companies to scale production, distribution and sales. Joining me from Mighty Craft is Mark Hazeman, the CEO, and Andrew Syme, the CFO. Both Mark and Andrew joined Mighty Craft in 2018 and 2019, respectively. Thanks for joining us today, gents. I'd now like to hand it over to you both whenever you're ready.
Great, thanks, Pedro. Thanks for joining us all this afternoon. So just a bit of an update. We haven't been on the NWR conference for a year or so, good to be able to provide a bit of an update as to where we are, and obviously very strong growth over that period of time, and a lot to look forward to as we start to come out of COVID times now. So we'll step you through, but just to remind you, we did list back end of 2019, where we had a bunch of relatively small businesses as part of our portfolio. We've started to build scale over 2020, where we added Kangaroo Island Distillery and started to really, I guess, push harder into the spirit space, with 7 Seasons coming on board, which has the Green Ant Gin in partnership with Daniel Motlop, and started to get organised for whiskey as well. We changed our name from what was Founders First Limited to Mighty Craft back end of 2020. Thought it better represented the story that we're taking to market and the category that we operate in. During 2021, we had our biggest transaction to date, where we acquired 4 businesses, which we call the Adelaide Hills Group. So Mismatch Brewery, Adelaide Hills Distillery, which is 78 Degrees, Hills Cider and Lot 100. What was effectively a $50 million transaction, doubled the size of the business. The other big thing that happened back end of 2021 was that we launched Better Beer in partnership with the Inspired Unemployed and Torquay Beverage Company, which is our incubator business. As we'll get to later on in the presentation, Better Beer is certainly hitting the market by storm and capturing the imagination of particularly the young adult drinkers out there in the market at the moment. Also pushed to 100% of Jetty Road, and you'll see that we've started to roll up to a bigger stake of bigger businesses now as we start to get scale and start to push forward to really make a bigger impact in the market. So pushing through the presentation, you can see that the way we, I guess, talk about ourselves is, it's really about combining the strengths. We're a portfolio play. We're the only listed company that plays across both beer, cider and RTDs in Australia, as well as spirits. Really have a big ambition to become Australia's leading craft drinks business. Within that, we have the 2 arms, beer, cider, RTDs, where we really want to build on our local position to build locally dominant brands that can then scale. Better Beer, again, is certainly doing that from a national perspective. And spirits really build out our portfolio with some amazing brands that we'll come to shortly. So, I guess the key enablers for us, once we invest in these businesses, we take on the sales, marketing, distribution, really drive the growth and accelerate the growth, which has been one of the hallmarks of our business, has been to continue to outgrow the category in whichever sector we're talking about, be it beer, cider, RTDs or spirits. So we'll come to a bit more of an update around where we are with our portfolio. But again, what we do, the aim there to become Australia's leading craft drinks business. So portfolio play, accepting not all of them will get to the scale that we may have hoped. And over time, we'll work through that portfolio to really optimise what we have in terms of our asset base. But what we look for, I suppose, is businesses that can really grow, brands that can grow, geographic spread from a beer perspective, so locally built businesses that can expand out, and from a spirits perspective, really brands that we can take not just nationally, but also to have global appeal as well. So once we get hold of the businesses and invest, we really accelerate their growth, put capital in, but then overlay our management and expertise, as well as the capital solutions that we can bring and fast track the growth of these brands to a scale that many of them couldn't otherwise have achieved. So what does the portfolio look like? We'll come to in just a moment, but it is important to remember that we are effectively a business that invests in brands and works through an investment cycle. So once we've invested in the businesses, we integrate them in. We do drive that acceleration. and leverage that portfolio positioning with our sort of key customers. And then we sort of drive the efficiency through and start to get, I guess, more capture the synergies and drive not just the top line, but the bottom line. So the portfolio management becomes important because not all of the brands and businesses are going to hit what we may have hoped. And as we evolve and mature as a business as well, I guess we're now starting to look at hanging onto the bigger businesses as part of our portfolio and potentially looking at ways to cycle out some of the smaller brands within the portfolio, which obviously makes sense as we start to get that scale. So over the page here, you can see that pretty strong representation with 6 beer brands, predominantly across the eastern seaboard, Ballistic and Slipstream up in Queensland, Foghorn in New South Wales with Jetty Road in Victoria. Then really strong in South Australia with Mismatch, which is the leading independent craft brand there. Hill Cider as well, so a great national cider brand. And then from a spirits perspective, a really strong portfolio, especially again in South Australia with 78 Degrees up in the Adelaide Hills. Kangaroo Island, quite uniquely positioned on the island. And then our kind of national brands, if you like, 7 Seasons with our Indigenous back partners with the Motlops. And then Better Beer, which is certainly, as I said, showing very strong growth. So as we look at what the portfolio looks like now, across beer, cider, RTDs, this gives you a sense of the scale of the businesses and the ownership stake. So on average, we've sort of got about 80% ownership position now, which is quite different to the way we were 18 months ago. So Jetty Road, Mismatch, Hill Cider, we have 100% of all of those. Most of those have production businesses in their own right. And then Foghorn at 75%. And then probably the one that's really coming out of the blocks now, Better Beer, where we own just under 40%. Inspired Unemployed own about 40% of that. And then our partner in that business, incubator business, Torquay Beverage Company, owns the balance. You'll see there that for the full year FY22, we're projecting that we'll get to 8 million litres in beer, cider, RTDs. Better Beer, we expect to be 4 million litres of that 8. And that's getting to a scale which is really quite significant in a 7-month time frame. That particular product is really doing very well, leveraging off the better for you positioning, no carbs, no sugar, but being a 4.2% lager. From a spirits perspective, so again, some really strong businesses there that we're really excited about the growth opportunity. So 78 Degrees, Kangaroo Island, both of which we own 100% of. As I said, 7 Seasons, our Indigenous back business that we own 65% of. Hidden Lake that we're bringing to market, our super premium whiskey out of Tasmania. So yeah, some strong brands there on the spirit side of things and venues which are largely in support of our brands. And the venue's probably playing less of a role now that we speak to you than perhaps what it was 18 months ago. And as I said, really those venues are cellar doors or brew pubs that help reinforce the positioning of those brands. So a strong portfolio and how's it performing in the market? So for Q3, it was a record quarter for us, which is not normally our biggest quarter seasonally. Normally Q2 is, but really strong in terms of revenue, 19.4 million, up 105% on the prior corresponding period. Operating cash was 2.9 million out the door, reflecting a bit of softness in venues as well as working capital build to support the growth. From an EBITDA perspective, reminding you that we did hit EBITDA positive for the first time in Q2, but on the back of a fairly soft finish to December with Omicron and January and February, particularly in the on-premise and our own venues, we did lose 1.3 million for the quarter. But the underlying trend is really improving and a significant improvement on the same period last year. Better Beer has been a phenomenon. So of the 19.4 million revenue for the quarter, Better Beer was just under 8 million of that. So without Better Beer in our numbers, still very strong growth on the same period last year. That's up at 1.8 million litres for the quarter. As I said, COVID did impact our results, but still very strong growth profile, and our cash balance with our, I guess, working capital build and some investment into Kangaroo Island distillery as well, saw our cash balance hit just under 7 million as compared to just over 10 at the end of December. So really strong quarter, strong growth. The key drivers of that growth, obviously, that expanded portfolio, which has helped us build out our distribution points. So you can see there Q3 on the right-hand side, over 35,000 distribution points as compared to where we were back in Q3 of 21, which was just under 15,000. So much bigger footprint supporting these amazing brands that we now have in the portfolio. And that's certainly driven the revenue profile that you can see on the left. The key metrics, as we like to track them now each quarter, revenue I've spoken to already. Gross margin sitting at 35.4%, slightly down on the prior corresponding period. I guess that's two things. One, on-premise and keg sales being well down, but also our mix not quite as strong in spirits and a bit stronger in beer, which has a slightly lower gross margin. EBITDA minus 1.3, cash, as I said, strong position at 7. And in terms of how we're tracking to our FY22 targets, you can see that just under 5 million litres on a year-to-date basis. So tracking well to deliver 8 for the full year FY22. Spirits bottles are just under 190,000 bottles. So again, well on track to deliver the 250,000 bottles for the full year. And from a whiskey perspective, our whiskey under maturation bumped up by a further 55,000 litres over the period, up to over 274,000 litres at the end of the quarter, well on track to our 300,000 litre ambition under maturation by the end of FY22. So good progress against each of those key targets. Just to sort of step you through a couple of updates around from a strategic perspective, over the last month or so, we have been doing a fairly extensive investor roadshow, just getting to the key markets, meeting face to face again now that we can travel and get out there. Some new people looking at the story, looking at the stock, which has been good. So we continue to have meetings in follow up to that. The Whiskey Development Syndicate, we announced that. So in addition to our increased ambition to lift our beer ambition from 12 million litres by FY25 up to 24 million litres, we also talked about how we're going to fund our way through to our whiskey ambition, which is to have 1.5 million litres down under maturation by the end of FY25. So we've launched a Whiskey Development Syndicate, which enables us, in partnership with that syndicate, to effectively fund our own whiskey bank without having to use our own cash reserves and leverage the Mighty Craft team to produce and mature that whiskey. So that was an exciting development. That fund, we expect to close that 10 million fund over the next 3 or 4 weeks, and then we can really double down on putting down our whiskey. It is tracking well, as you can see there, well on track to hit the 300,000 litres by the end of FY22. Importantly, we're a high growth business. Expect to really rebound strongly out of COVID, which did have significant impacts over the last 18 months. But for us to manage through that, we are exploring a bunch of really important capital management initiatives to make sure we manage our own funding through that growth. And that's been a big focus now for 3 or 4 months. And there'll be some more news coming through on that capital management front over the next probably 6 to 8 weeks as we sort of manage our way through our own growth curve over the next 6 to 9 months. Just to update you guys on where we are in terms of COVID impacts. So, just important to remind everyone that venues traditionally were nearly up to 50% of our revenue. They were down to 25% for Q3. So wholesale for us has kicked up to 75%. Fortunately, we're very strong in wholesale. We perform very well with the nationals in the top end of town, which is the majority of our mix. You can see that on the right-hand side. But the unusual thing really for Q3 was kegs were only about 11% of our sales mix, and on-prem only at 13%. So that has hurt us from a margin perspective, but we're seeing that really bounce back more strongly at the back end of March and certainly through April, which has been a very strong month for us as well. So certainly a COVID impact, but we're looking to put that behind us now as we sort of really get ready to come strongly out of that impact over the last couple of years. Key areas of focus for us, so not just driving growth. I mean, growth has been something we've been very strong on, but really driving profitable growth now and managing our cost base, making sure we really set ourselves up for a strong rebound on the profit line, not just the revenue line for FY23. Get to that sustainable profit position. Better beer, we have been limited by stock availability. When we first launched, we sold 6 weeks stock in 2 weeks. So we're sort of out of stock more through November, December, January than we were in stock. So this product going exceptionally well, hugely disruptive. And I've got a call out last week in the Endeavour Group quarterly. Steve Donoghue spoke of it as in the impact it was having on the beer category in mainstream beer. So really exciting to see what that brand can do over the next 12 to 18 months and years to come. From a spirits perspective, a big part of our strategy going forward is to really build out this portfolio. We have a highly differentiated, highly awarded spirits portfolio, and really looking to build that out now and bring scale and leverage our customer relationships to really build those brands. Execute our whiskey program. So we've talked about building our whiskey bank, getting to 1.5 million litres under maturation by back end of 2025. So that's well on track. If anything, we're under pressure because we're starting to sell and get really good demand of the 78 Degrees whiskey that we have available to us now, both domestically and export-wise. There's some real opportunities opening up for 78 Degrees whiskey, which is fantastic, and particularly as on-premise opens up. Capital management, as ever, so important to manage our own way through our growth. Working really hard on doing that in terms of the way that we've set ourselves up. So I feel like we're well placed to make sure that we can build inventory, sell that through, and be in a good position come the end of the year and through Q1. And really, I guess, setting ourselves up to rebound very strongly from COVID, which I think, again, we're seeing in April's numbers, which were very, very strong. Setting ourselves up for a very strong finish to FY22 and a really strong start to FY23, which I think will be a real inflection point for Mighty Craft going forward. So thanks. I'll pause there and happy to open up for any questions.
Perfect. Thanks a lot for the presentation, Mark and Andrew. It's been great to get a bit of an insight into Mighty Craft and how Better Beer has actually helped you guys grow. On to questions now. In terms of seeking new portfolio brands, what features and/or metrics, are you looking for?
I think really the focus for us at the moment is, we've got an amazing portfolio of brands. We've only had the Adelaide Hills brands, in totality since December, in actual fact, because we only got 78 Degrees back then. So I guess the job now is to really get these brands to thrive. There are some gaps in the portfolio. So you look at our spirits portfolio, we think in addition to vodka, gin and whiskey that are all super fast growing categories, there are opportunities around rum. So we'll sort of look at that. From a beer perspective, we do have gaps in the portfolio in WA. So, we will look at that in time. But right now, I think managing the growth of Better Beer and the balance of our portfolio is the main focus at the moment. So, I guess we'll see as opportunities come to hand. But at the moment, really driving hard the portfolio we have and tidying up a few of the businesses within there as well. So we set ourselves up for a good start to FY23.
Perfect. You talked about the investment cycle. What's the typical duration from acquisition to realising full potential of a brand? And how does this vary across different product types?
Yeah, great question. I think, where we are a relatively young business still. So, with a market cap of circa 100 million, we'll be listed sort of 3 years come December. So we're relatively young. So we're at the early stages of that cycle. I think, spirits brands typically take 5 to 6 years to probably really hit, their sweet spot, and beer brands are probably not far off that either. I think for a brand like Better Beer to effectively get to the scale of a Bolter, which, sold for, somewhere between 100 and 200 million from what I hear. They were doing just a tad over 4 million litres when they sold. So, for Better Beer to get to that sort of scale after 7 months just shows you, how out of the box that product is. And then that's really well supported by, fantastic brands like Mismatch, Hills Cider, Jetty Road. So, look, I think that cycle, between 3 and 6 years, and I suppose we're just at the front end of that time frame with most of our portfolio.
Perfect. Unfortunately, that's all the time we have today. Thanks a lot, Mark and Andrew, for joining me on the NWR conference today.
Thanks very much. Appreciate it.
Thanks, Joe.
Cheers.